Hello and welcome to a special episode of TAXtv. I'm joined by Neil Warren to look at what is a fairly fundamental change in VAT across Europe. And it's something that a lot of people are pushing to one side, thinking, oh, that doesn't apply to me. And we seem to be in a position where people who should be worrying about it aren't, and people who probably don't need to worry about it are. So the decision was taken after various people got in touch to have a closer look at it with VAT expert Neil Warren. Neil, welcome, first of all. The MOSS, Mini One-Stop Shop, is effectively a new reporting system, but we need to look first of all at why we need a new reporting system. So perhaps you can, in a minute or so, explain to us what is this new regime across Europe?
Yeah, it's described in some circles as the most radical change in VAT for 40 years. That's perhaps a slight exaggeration, but still very important. At the moment, if you've got a UK business selling an e-service or a broadcasting or telecommunication service across the web to a non-business customer, so that's a key word, non-business customer, in the EU, outside the UK, then the starting point is we charge UK VAT at 20% because that's where we've got our business. From the 1st of January 2015, that rule goes out of the window and we charge the rate of VAT that applies in our customer's country, so France 20% or Poland 23%. We charge that country's rate of VAT, not where we've got our business, and the MOSS is the way we pay that VAT over to the tax authorities at the end of each calendar quarter. So that's the starting point, is we move from supplier country to customer country, but only for services across the web.
Okay, so there's three E's that I want to talk about first of all. So we're talking about e-selling. So it's got to be over the internet. There's nothing face-to-face about this. This is e-sales of e-things. And give me the three again.
Broadcasting, telecommunication and electronic.
And as far as electronic is concerned, I'm guessing most people will be in that one. What sorts of things should we be looking at there?
Yeah, when you talk about electronic, it's a service over the web that requires minimal human intervention. So things are covered like selling software, subscriptions to websites, advertising on the web, downloading of music or games across the web, and most things linked to online computer training that requires minimal human intervention will be covered as well. There's actually in the HMRC guidance, there's about 120 things that qualify as an e-service, and most of them I'm not sure what they are because they're all very much IT based, but there's some common examples.
If I sold an app, let's say, I'm a UK business, I'm going to sell an app, and the person who buys it happens to be some 16-year-old guy in France, that would bring me into this particular regime.
Absolutely.
Okay,
yeah.
So I promised you three different E's. We've only done two. It's an e-sale of an e-thing, and it's in the EU. So my website is going to sell some tax software, or of course somebody who subscribes to TAXtv might be in a position where this is relevant to them. If an individual subscribes to TAXtv we'll choose Poland for a reason that'll become apparent, then I would be caught by this regime, first of all. And number two, when my website creates an invoice for that person, the VAT that it would need to charge would be 23%, as opposed to 20% if it was a UK sale. Absolutely,
that's right. You mentioned Poland. Poland, the VAT rate is 23. What the rules say is that if you make a sale to a customer and the customer can't give you a VAT number in Poland, so the customer says, I've not got a VAT number in Poland, then you've got the right to treat it as B2C, business to consumer, which means VAT 23% after the 1st of Jan, and declare the VAT on a MOSS return. If the customer comes back to you later and says, oh, sorry, I have got a VAT number, I just forgot to give you it, or didn't realise why you wanted it in the first place, here it is, then you can go back and correct the VAT charge with a VAT credit. But as a principle, if you've not got a VAT number from a customer in the EU, then you've got the right to treat it as B2C under the new rules and charge your VAT.
And that's how we decide if it's B2B or B2C. They haven't got a VAT number they can give us.
That's right. You mentioned invoice. With the B2C sales, if you're doing B2B, you need to issue an invoice showing the customer's VAT number and reverse charge, all that sort of thing. If you're doing a B2C sale, then what the EU guidance says is you don't need to issue an invoice, but they describe it as a bill or receipt. So you've got some paperwork that you give to the customer, but it doesn't need to be a full invoice as if you're selling to a business customer.
But more importantly, I would say, when they're by themselves sitting in Poland filling in their information onto my website, the website needs to know not to charge, let's say it's £10, needs to know not to charge £12, but rather charge £12.30.
That's right. That's something I've not really worked through. Whether you just make the same selling price across the EU as a business and just say, well, we're going to win in Luxembourg, where there's 15% VAT. So if we sell for £12, including VAT, we're losing, 3/23 in Luxembourg. So we win if we sell to Luxembourg. We lose if we sell to Sweden, where the VAT rate is 25%. But overall, we'll perhaps come back to 20%. Or whether your computers can actually charge a net figure for each sale and hit the right rate of VAT according to which country you're trading in. That's a software challenge.
So there's two possibilities. We could say, here is the net price, we're adding 28 different numbers potentially, though some will be the same, of course, versus saying, look, our price including VAT is £12. We will deal with the fact that some of that VAT is at this rate in this situation and a different rate in another situation.
That's right.
Okay, so an awful lot of bits and pieces to think about. Yeah. Let's move on to the second problem, which is how on earth do we actually administer this?
Well, the starting point is that if you make sales in 28 different countries, you need 28 different VAT numbers. That's the starting point, because you're making a sale in each of those countries. Now, this is a key thing with the rules, and probably a wider issue as well, that if you are a UK business, then you get a VAT threshold in the UK of £81,000 before you need to register. If you're making supplies in another EU country where the VAT is not sorted out by reverse charge by customer or acquisition tax by customer in the case of goods, or in fact a domestic UK VAT charge, then the sales in those countries, you've got a zero threshold. So one sale for £50 in Ireland or £20 in Poland that you mentioned means you're captured by these new rules because that sale is greater than zero. But the good news is that you don't need to get a VAT number in all the different countries. You can instead get the MOSS registration, apply online to HMRC, get your MOSS registration number, and then each calendar quarter you fill in the MOSS return to declare the tax paid in all the different countries, which is a lot better overall than having to get all these different VAT numbers in countries with all the language issues and the administration issues that goes with it.
So let's make sure I've got this. So I have two customers. I know it's an implausible example, but it'll save time. I have two customers, both with sales from me of approximately £80,000. And we have the variety of different E requirements. It's an E-sale of an E thing in the EU. 80,000 UK, 80,000 France. Now I might be VAT registered in the UK. In fact, today I would have to register for VAT in the UK. That's right, isn't it? Because I would have £160,000 turnover.
That's
so
right.
I would have to register.
If your French sales were B2C,
assuming all my sales are straight to the general public,
yep.
I've got 160,000 turnover, I'd have to register for VAT. Right. But 1st of January, I might be in a position where I deregistered in the UK because I only have 80,000 sales, but I would automatically have to register in France because at 80,000 I'm above the zero that I'm allowed.
Yes.
And therefore my options are either do a French VAT return,
yes,
and don't do a UK VAT return, or alternatively decide that actually because I don't speak French I'm going to go for the MOSS option. But if I do that I have to have a UK VAT number. Presumably then that pulls the UK 80 into VAT as well.
Yeah, you've hit it spot on. One of the problems with MOSS is that to get a MOSS registration, you must have a UK VAT number. Now, there might be many small businesses across the UK who are doing, say, 70,000 a year of UK sales and perhaps 5 or 6 of EU sales, all B2C, and thinking, oh, that's okay, we're less than 81, no need to worry. Yeah, that is the case with UK, but from the 1st of Jan, those 5,000 or 6,000 in the other EU countries, you're captured by the zero threshold and you need your registration. So in your case, you've got a dilemma that either you've got to take a hit on the UK sales and account for output tax of 1/6 to get your MOSS registration, but with your figures you mentioned, so 80,000 in France and 80,000 UK, then it's more feasible to get the French VAT number and submit the French return to the French tax authorities because only one registration. If you were saying that you've got 80,000 spread between 27 EU countries of £3,000 in each country, then you would have a challenge because you would either have to get 27 VAT numbers to avoid a UK problem, or take the UK problem with a registration, and then you can get your MOSS to make life easier. So that is a dilemma. You know, there is a couple of ideas around dealing with that scenario to do with splitting the UK and the EU sales into two legal entities, and then the UK one stays out of VAT less than 81, and then the second one gets its MOSS registration because it's effectively then able to get a UK VAT number. But business splitting requires some care and attention and focus and a proper split to avoid an HMRC challenge.
Okay, so I think I think inevitably we're going to conclude that MOSS is the way forwards for the vast majority of people in this area. If we decide MOSS is the way forwards, then is the reporting pretty much the same as we'd be used to now with our VAT return filing, or is it going to be particularly complex? Is there any additional information we need to keep?
Yeah, as I understand it, it'll look a little bit like a Eurovision Song Contest voting slip. So you've got all your countries down one side, you put a number on the right-hand side, so France, de Poit, and Norway, not Norway because they're not in the EU.
Yeah.
So it's in sterling, so that's good news one. Secondly, it's done on a calendar quarter basis, so it's not every month or it's a quarter, and you get 20 days after the end of the quarter to file it online and also pay the tax as well. You pay the tax electronically, but you can't pay by direct debit. And one thing that you cannot do on the MOSS return is you can't claim VAT back on expenses. Hopefully most of the overseas expenses will be VAT free anyway because you're buying B2B as UK business VAT free. So any input tax you incur on UK expenses to do with your software in Poland or software in France incurred by, for example, a UK subcontractor working for you, you'll still put that input tax on your usual UK VAT return. So MOSS is purely a sales-only return.
Okay, so in fact, the MOSS return is going to have a feel, well, not a feel to it but it's going to sit almost alongside the EC sales list as another document that when you're filling in your VAT return, if I have a UK business with a normal VAT quarter with European customers and, sorry, B2C customers and European business customers, I would end up actually submitting my standard VAT return and an EC sales list and a MOSS return in the future.
Absolutely, that's right. One thing about MOSS returns is if in a particular quarter you haven't got any relevant sales B2C in the other countries, you must still do a nil return for that period to make sure you're compliant. With an EC sales list, if you've got no relevant sales, then you don't need to submit a return. That's a fundamental difference between the two. And of course, in some cases, if you're also selling goods as a business with high volumes, you might have to do intrastat as well. So you could have VAT return, MOSS, intrastat, and EU sales list as well to deal with. But with the MOSS return, it's the calendar quarters, not your VAT quarters, which might be the same. But it's always March, June, September, December. So the first key date will be the 20th of April 2015 when the March MOSS returns become due and payable. Okay,
but if you have a February year end, let's say, for your standard VAT work,
yes,
then actually there's going to be a good argument to change that if you have a lot of European sales.
Could do, yes, that's right. Although I still think it's best to keep your VAT returns in line with the financial year because that makes things easier when it comes to year-end reporting. But yes, that's right. And I suppose also you could say if you've got a February VAT return and a March MOSS return and an April EC sales list, then you can, it staggers your duties a little bit so you've not got all to do in one go. A couple of things about the new rules that I think are worth highlighting to our viewers. The first surprise, which has surprised a few people, is when it comes to retaining records about these particular sales we're talking about, then the period to retain the records is not for 6 years like we've got in the UK, but 10 years from the end of the year when you made the sale. So if you make an e-service sale into Poland on the 1st of Jan 15, the first day of the new regulations, you keep the records for that sale until the end of December 2025. Now that is because some EU countries require 10-year record keeping retention as a standard requirement in their tax legislation. So we're basically, the EU is saying we'll run with the longest period of time.
Because you're effectively working in that country.
That's right.
Okay.
So for all countries, therefore, it's 10 years, France, Italy, etc. And secondly, when you make a B2C sale, assuming you don't know where the customer is actually downloading the service in question, like a farm in France or hotel in Holland, then you need to know the customer's place of residence, where they're actually living and where they're actually consuming the service. And you need 2 pieces of evidence from that customer about whether they're in France or Italy or Belgium. Now, the first evidence is usually quite straightforward, that you know if they're buying your software by credit card, you've got the billing address of the credit card. So that's normally piece of evidence 1. But the second piece of evidence can be more challenging and can vary as to what you retain according to what your particular business is. I've been dealing with one recently, doing with e-books, and the second piece of evidence we've gone for is the country where the credit card was issued from. So in my case, there'd be a UK issued credit card with a Manchester billing address, so that means I'm UK, but the second piece of evidence can be challenging and depend on what type of business we're looking at.
And so for a lot of people, presume we don't even have the postal address always, do we? Because that we're not sending them anything. It's an e-service, and therefore there's no need for that. So as you say, where the credit card was issued, something like that might be the only way forward.
Yeah. One other thing as well, just to highlight specific industries. In the UK, if you're doing business like online gaming, financial services and certain training supplies, now particularly by the not-for-profit sector in the latter case, like charity training. In the UK, for example, online gaming is exempt from VAT, so at the moment there's no VAT issues to worry about. It's all about UK, which is exempt. Other EU countries do not automatically treat those supplies, financial training, online gaming, as exempt in their country. Now, I thought that the directive, when it came to exemption, the EU directive was basically consistent, that we will apply the same rules on exemptions, not 0 ratings, but exemptions. But for those 3 sectors, the directive, the EU directive, gives flexibility for member states. So, for example, I understand that in Holland, online gaming is standard rated. So at the moment, a UK business doing a online bingo or whatever to a Dutch customer, that's VAT exempt UK, but from the 1st of January, that would be standard rated in Holland. So for those 3 sectors, the challenge is to look at the 28 countries and see which of those countries do not apply the exemptions, where if they don't, then to do it properly, you've got to account for the VAT, Poland 23, Ireland 23, exactly the same as we've been talking about with the applications and the software. So that's
Wow.
3 different industries that need particular care.
So, as you say, even if you think it's not a problem for me because I'm exempt in what I provide, actually if you're selling it in certain European countries, you might not be.
That's right.
Huge amount to think about, and that's why we have made this TAXtv special, hopefully useful. Do get involved, do get in touch with us via the email address on screen, and do join us for future episodes of TAXtv. But for this episode, bye-bye.